Yo, 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 yo. What's up, eh? Here we go. All right, welcome to Forex.Today, the YouTube community of more than 20,000, more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Let's go! Okie dokie. So, hey, we're going to do technical and fundamental analysis. We're going to use the TRADARS analytical platform for both technicals and fundamentals. We're also going to use the Traders Way MT4 platform. So it's a combo of TRADARS and Traders Way. Makes sense, doesn't it? Oh, for sure. Cool. For those that are in our prop refund, our prop fund, I'm issuing your cash payments today. So cash will be going out today, maybe tomorrow, but I'm definitely going to do the downloading today. So look for your PayPal emails. Cash money. Payday, baby. Payday. Very cool. Yeah. Cool. So anywho, let's take a look at the world that we have in front of us. Markets are still not open. So earlier today, I've already gone through all the fundamentals, so I don't need to do it again. One of the things I do want to do is go through the calendar. So let's go through the sentiment tab and get an update on the news that has occurred in the last couple of minutes. Let's go. Forex Live European FX News Wrap, a brand new month, but same old story for the dollar.
Czech factory activity remains in contraction.
Gold price forecast. Gold Euro US dollar resumes its uptrend, heading to $3,365 and $3,450 lately.
Bay Street may open higher on firm commodity prices.
70 out of 23 economists expect the Bank of Canada to cut at least twice more this year. Oil leaps more than 3% after OPEC Plus keeps output increase unchanged.
SPX 900. Meme coin eyes bullish reversal amid open interest surge and golden cross. Yen seeing impressive gains on solid fundamental data. Scotiabank.
Pound gains offer retracement back toward recent multi-year high. Scotiabank.
Euro climbs within range. Scotiabank.
Cool. And we have Aussie yen falling. Very cool. So all of this has just come out in the last few minutes. Taking a look at today's calendar. Let's see. So more PMIs. Okay. ISM manufacturing in 1 hour and 38 minutes. Okay. Tuesday. Okay. In 13 hours. Look for that RBA meeting minutes. Yeah, and then we're slowly getting ready for non-farm payrolls on Friday. Now, if we're going to look at, which news events this week are important, we're going to pull up this calendar. This calendar filters things by volatility, and then it looks for patterns in the volatility. So ISM manufacturing is an opportunity today. It is. Cool. Tomorrow morning, European inflation. That is also an opportunity. JOLTS presents an opportunity. Okay. Then we have Asian trading here, and then we have Bank of Canada way out there on Wednesday. Notice there's no ADP. You're like, yeah, but ADP is a scalp. Maybe. It's hard to prove. I can't prove that it is, but I can prove that Bank of Canada interest rate decision on Wednesday will be an opportunity or a threat, really, depending on your direction. But the thing is, the ADP, which is also Wednesday at 8:15, it provides the vol, but not a pattern. Sometimes it creates dollar strength, sometimes it creates dollar weakness, but very inconsistently. So it's hard to pre-plan, right? Interest rate decisions way out in Europe, way out on Thursday. So maybe on Thursday we'll just watch the ECB together. Yeah. IVPMI also Thursday. That's probably a better opportunity. And then NFP on Friday. Yeah. NFP on Friday. Oops. So anyways, let's go back to today, 10 a.m. Huh. Well, those bells. I don't think I've ever seen that before. Yeah, that's a pretty thin opportunity. Look at that. If it's less than, we've never seen anything before. If it's greater than, not much going on. Yeah, so right there, that tells me to be careful. Much better trading opportunity here on European CPI. Much better opportunity. Not great, but much better. And look at this. They're all scalps. It doesn't have a long-term impact. They're all scalps. Less than by dollar. Greater than. That's actually kind of interesting. By yen. Sell dollar, sell dollar, sell dollar, sell dollar. All right. Consistent there. Pretty consistent up here. All right, so great. So right off the bat, we can see that tomorrow morning's a better opportunity than the later this morning. Cool. See, we have the data. Look at this. One symbol affected, 6 symbols, 7 symbols, 6, 7, 7, 7, 7. So you can also look at that as the better opportunity. I don't know if you do this, but you can schedule this on your calendar. Isn't that nice? Euro area inflation. Isn't that cool? How about tomorrow night? You're like, oh, 7 symbols. This has real one. We can put that into the calendar. Okay. Then you can also cut corners too, and you can say, let's just click on one of these things. Okay, you can type this stuff. You can do actual. Here, up, which is funny, but it is what it is. Okay, and then you can save it. Isn't that cool? Anyway, so I don't know if you do any of that. The other trick is if you look at this and you're like, wait, does Australia have the Southern Cross and the Southern Star? Or is that New Zealand? That's another way of checking. Is that Australia or is that New Zealand? Okay, like what country is that? You can cheat. Cool, right? Nice hack, Wayne. Nice hack. You're welcome. Let's read 100 articles. I need more coffee. I've had 6 Nespressos, and I just made a full pot of coffee. Yeah, see, New Zealand dollar. So how many people here have reviewed the Commitment of Traders report that came out on Friday afternoon at the close? Yeah, I did. Jim did. Anybody else? Yeah, JGB did. Yeah. Dan the man has. A lot of people did. I reviewed it. I think Maida reviewed it on Friday with the team. I reviewed it this morning with the team. Plenty of opportunities. The interesting thing is this is what the media is writing. It's not how everybody feels, because I can't do that. I can't measure how everybody feels. But I can look at 29 articles on 5 different websites, and they're saying good things about Kiwi dollar. Here's the interesting thing. I can't prove that this is what institutional traders are doing. So, this is important to decide if you're going to, let's say, be long-term long or short-term long. So this is what the media is thinking, but is it what institutions are doing? 2 different things, right? Yeah. Good. Well, at least we have that, right? And don't forget, we'll be moving into the market open pretty soon, so you should already know what you're trading today, and you should be lining those things up. And it's only 8:30 in the morning, but you should already almost probably already be in some of your trades. And we know that, like, let's say you love euro dollar. I don't love euro dollar, but let's say you do. Okay, you should already know Oops, gee whiz, clicking every wrong button I can possibly click. Let's try this again. Okay, you should already know that you're a couple hours late for trading euro dollar on Mondays. Yeah. No, that's just it. And this is the best time of day, pre-London. Now we're in pre-New York. Yeah. See, Rich is already up 70. Yeah. So you have the up, the down, and then here's the thing. This is where you do technical analysis. So you say, well, if it drops down into here, I want to buy it. Now I'm doing role reversal here, right? But then you also see the implied low, which kind of says the same thing. So you should be deciding, or have already decided a while ago, that your projected lowest low is here and your projected highest high is there. So are you buying a dip today? Are you buying like on a roll reversal? Are you buying on the implied low? Are you buying on the moving average? Like, you should already know if you're buying. Are you a buyer? Is USD weak or is euro strong? These are the questions you should be asking in your process of lining things up. Again, at traders.com, we already covered this like a while ago, an hour ago, right? Cool. So this is, that routine that you need to be going through at the right time of day. And so now you know what time to do your routine. So if you were going to trade euro dollar, okay, then there was this time and then there was that time. Only on Mondays, though. So you can see the market open, right? The market open, Asia open, rolling into European open. That's actually the best vol. Here's your European prime time, and then the fizzle, and then you're already about an hour and a half behind prime time. It's only 8:30. So somewhere between 6 and 7 in the morning, you should be on your New York trades, setting it up, okay? Setting it up and entering. So, like, for example, if you're struggling with your trading and you trade euro dollar, one of the issues is you might be trading in this period in which you're adding to positions while everybody else is getting out. You see, you're the liquidity event. So you need to trade at the right time. Yeah. Another thing is if you do quantitative analysis, euro dollar might be moving up or down, in this case up, but there are better things to be trading, not just based on implied volatility, but on macroeconomics. What do you want to do with gold? So at the European Open, there was a modest move or gold moves modestly. Gold moves better in New York. You see that? So we know, I can prove to you that between 6 and 8 in the morning is your trade. So you have to decide before you even look for a trade, you have to know if you're a buyer or a seller. Okay. Are you a buyer or a seller? Okay. So if you're a buyer, okay, that's technical analysis. Okay. And your two buy zones are the moving average or the implied low. And you know it's likely to happen between the hours of 6, 7, and 8. So it happened at 7:30-ish. And now your target's here. Isn't that beautiful? Yeah, it is beautiful. I know, right? All right. So, speaking about routine, it's time. Say goodbye. Yeah, we need to do the euro dollar. All right. Are you bullish or bearish? Where's my thing with the stream marker? Okay, euro dollar. Okay. Derek, what do you love? Oh, this format going through the routine? Yeah. Yeah, I think pretty important, right? All right, hang on. I'm a little slow. Okay. Sorry, I'm very slow. All right, we'll do it this. We'll do it this way. All right, euro dollar. Let's take a look. It'd be great if you actually said if you were a bull or a bear. That would be great. Euro dollar. Let's take a look at what we have here. So we're looking at euro dollar on 5 different time frames, and we are looking for reversal patterns only, and we're looking for trend patterns only. So I guess they can't be only, but we're looking for both trend patterns and reversal patterns. That's it. There are many other patterns, okay, but that's all we're looking at, and we're looking at 5 different time frames. And what do you see here? You're like, Wayne, I only see daily chart. That's right. What does that mean? What can we infer? There's no trend pattern. Now, let me double check. I'll double check. No, we got it right. There is no trend pattern. Well, I should be careful here. This is a sideways trend. So on the 15-minute, no up or down. 30-minute, no up or down. Or up, down, or sideways. Hourly, no up, down, or sideways. Or reversal. So all we know on the daily chart is this pattern, a triangle emerging, is showing consolidation. Okay? Cool. Now, what do we see here? Well, you can interpret this price action differently. It's saying there's a possibility. See, it hasn't happened yet. That it breaks out to the upside using harmonics as a theory. See, none of these things have happened yet. They're not predicting the future, but they're also not the past. They're showing you that these things are emerging. Now, it may emerge, Now, you might assume if the previous trend was up, then you would probably assume this. But we're not looking back that far, so it's not a prediction of that. What it is telling you is it's making higher lows and lower highs. And if it continues, then that's going to be the pattern. But we don't know. Okay, great. Now, the other way of looking at it is sometimes this produces a reversal pattern from down to up. Or to say differently, it tends to break up even if it makes a lower low. All right, so this is simply a Gartley. Has the Gartley formed? No. Is that a Gartley? No. Notice that there's no candles over here. It's because it hasn't, but it might. Okay. So we kind of have two that suggest to the up, but we don't know. But the most useful thing is that on multiple time frames, there's not a lot to go on. In fact, there's nothing to go on that's reliable and repeatable. Now, you might see something, but in this situation, it's probably a mirage. Now, one of the things we did earlier today at traders.com is that we went through the macroeconomic scorecards and found out that Eurodollar's mediocre at best anyways. Yeah. Mediocre at best. But, we put this in our routine because I think most of you love trading Eurodollar every day. What we're saying is technically and fundamentally, you should be able to find something better than that, bro. And this is why you have data. There's no opinion. I don't like Eurodollar. I don't hate it. I have no emotion about Eurodollar. Yeah. It's just not the best trade. There's better trades, fundamentally and technically. Cool. So let's take a look. Let's keep moving. Are you a buyer of the S&P 500? Are you a seller? What are you doing today, my friend? Let me know. 3, 2, 1. Kick busted. Doon, doo, doo. Oh, I didn't hit the little thing. Okay, S&P 500. Let's see. Let's go. Yeah. I think I can click and give it a little juice. Juice that sucker up a little bit. All right, what do you stink? Ooh, we got some bulls and everything. Noise. Yeah, now Richard's going the other way, or the extra step, and he's saying, well, if you're a bull today in the stock market, then maybe that issues U.S. dollar weakness, and euro dollar does break to the upside like our pattern recognition. Remember, this is sort of technical analysis, but it's much more pattern recognition, than anything. Same but different, right? So we're looking at 5 different time frames, looking for probably a total of 10 different patterns. So we're doing 50 things right now, and it just takes 1 second. Cool, right? Yeah. So, great. So what do the patterns suggest? Not necessarily up. Not today. Oh. Now, first of all, there's nothing on the 15-minute, nothing on the 30-minute. Of all the patterns, think about that. Not trending up, not trending down, not trending sideways, not reversing. Oh, will this change in the future? Yeah, and if a pattern produces on a 15-minute chart, it's going to pop up into here. Most likely you'll find, either consolidation or a directional bias, right? Like technically the pattern is channeling down or channeling up. Right now there's nothing. Well, it makes sense. The market it opens in 45 minutes and it's Monday. So it makes sense. But look at that. It takes me a millisecond and I can tell you there's no reliable, repeatable pattern on the 15-minute or the 30-minute. Yeah. 4 hours ago, it's kind of doing like a 786 type pattern. Okay. On the hourly, a 786 retracement produces a shallow lower high. And then from that, we don't know. And that heads up came out 4 candles ago when we were here. And it's, okay. So I'd like it to do that, but We don't know. We just don't know. The market hasn't opened yet. Yeah. So we don't have the volume and volatility. And that's it. That's all there is. And I'd say that's a pretty weak move. Like it's predicting. So the way I do it is I say a 786 predicts a 121.4. That's what I do. No one else says that. If you have a guru on YouTube that says something like this, it's because they learned from me. I made this up because I'm self-taught. But it's not in any book anywhere. Yeah. But anyways, that's interesting. I'd say that's a pretty weak opportunity. Cool. Well, things will change throughout the day, and this will populate with opportunities or threats. Okay, now we're out on the 4 hour, and kind of the same thing. Okay, if you were a bull, you'll probably look at, okay, this being a buy and this being a buy, wouldn't you? So if it turns north in the next 4 hours, you can take a shot here. Okay, see all the way up into here. And then expect profit taking, right? Cool. So it says down, but that's not what it means. Okay? It doesn't mean sell. So now you need to be watching C. If C comes down too much, that's going to be a problem. So I would say, like, let's say it turned up in this new 4 hour candle. I'd call that about a 50%, seems like. A 50%, okay, predicts a 1382. What this is saying is if it turns north, yeah, you'll get that 1382, but it's suggesting be careful of massive profit taking, or if it's a swing, then you set up this one and then you take that one. Okay. Now, here's something similar. Okay. Higher high, lower low, higher high, higher low, okay, and we have some form of consolidation, but because it's making higher highs and projected to make slightly higher highs, and at the same time making higher lows, each one has a more narrow range, but this pattern, if it continues, that's the thing. If this continues, this pattern suggests continuation. So now you interpret buying dips this way, okay? Buying dips this way with the outlook that the bottom holds. Okay? Okay? So that's what I can do. I see all of that in, I think 10 seconds would be fair. Okay, remember, this is the S&P 500 on 5 time frames. We're looking at multiple trending patterns and multiple reversal patterns. So let's just say there's 10 patterns on 5 time frames. So I can look for 50 things, and whether they exist or don't exist is informative, and it takes me 10 seconds. Bet you take longer if you don't have TRADARS. Okay, these radars are amazing, right? The indice radars, pattern recognition radars. Man, it's great because it's so fast. Now, does it replace going to my, Traders Way platform? No. This is what I do before I go there. And so like euro dollar might be moving. You might be looking at euro dollar and you're like, oh, I want to buy a dip. I'm not at that situation right now because I can't prove that it's worth my time. Fundamentally, I can't prove it. Technically, I can't prove it. And that's why we have these radars. You need to be not just doing the right thing with the right technique, but at the right time. And once again, you might be right on the direction of euro dollar, but there's other things that are more right, or you're trading it at the wrong time. So when you're buying a dip, what are you doing? Most of the world is selling their position for profit, and you're buying it from them, which means you're giving your money to them, and they're leaving the market with profit. And you're like, man, every time I buy a dip, it doesn't extend. Then you blame your broker for trading against you or some nonsense, right? No, you're paying everybody their profit. That you're trading at the wrong time. You need to be buying early and exiting late versus buying late and exiting early. You see? You might be doing precisely the right thing at the wrong time of day. We have the data to prove that, and therefore you can adjust your behavior. Okay? Cool, right? All right, tell me, what do you think about this one? Pound yen, the beast, the beast, the beast, the beast is on fire. Okay, what do you think? Are you guys bullish or bearish? I'm bullish or bearish on pound yen. Richard sold it on Friday. Jim says going down in a blaze of glory. Cool. Well, let's take a look and see what's up. All right. We're looking at the 15-minute, 30-minute, 60-minute, 240, and 1,444-minute charts. Looking for, at least 10 patterns on each chart, whether they're trending or reversal. Once again, nothing on a 15-minute. No up, down, sideways. No up, down, or sideways, or reversing on the 30. Okay? What we see here on an hourly chart is a falling wedge, so that is bearish, with a down leg, which is an opportunity for bears. There you go. So this already was given to you 2 hours ago, so you're already late, bro. So you were given the heads up here when we were at the top of the primary sell pivot. See, let me do this. Yeah. Okay, now we're talking about how to trade properly. This is your primary line. You have to know that. So you have really two choices that are, there's other things, but, well, let me try to do all of them. Okay, you can sell off the primary. You can sell off the moving average, or you can sell off the roll reversal. If the thing is, I don't care which one you do. In fact, none of it matters. Maybe you've sold a fib. Maybe you sold a daily pivot. It doesn't matter, dude. They're all the same thing. Where most people go wrong is they don't know to buy or sell. So they go to their chart and they're looking for things to do, and, they never get it right. So if you just simply planned on doing this today, not a problem. And so 2 hours ago, you got the heads up and you're like, oh, okay, I guess it's go time. Yeah, cool. What about the daily though? Okay, the daily. Well, we don't know the future, but this is what makes today a challenge. Oh, Wayne, I want it to be easy. Yeah, well, we all want it to be easy, right? Okay. There's our primary line here. Uh-oh. Okay. Uh-oh. Yeah, that is a big uh-oh. It is. Because it's a threat to change direction here. But what do we know? Is a reversal pattern forming? Not on a 15-minute chart. Not on a 30-minute chart, not on an hourly chart, not on a 4-hour chart. nor a daily chart. No reversal pattern like a Gartley has formed, nor an upside breakout. So yes, it's the right thing to be worried about, but don't freak out. It has not happened. But if it was going to happen, it would probably happen very soon, meaning sometime today or tomorrow. But has it happened? That's the bigger question. Yes, it might happen or even probably happen. Okay, yeah. But is it? No. If an emerging reversal pattern forms, you will be updated. And you will know. And then you'll say, oh, the probability of that reversal is pretty high because we got that. We're on the primary line. Yes, I should be worried. But not now, because that hasn't happened. So how could you look at this? Well, you guys said you were bears, and it's bearish on an hourly. What if we head down to there? Then guess what? You'll start to see new patterns forming on your pattern recognition radar. Radars for traders, guys. If it breaks down, this will update and notify you. It'll show you all of a sudden a different pattern will form. Probably happen on a 15-minute first, and then 30, and then 60. And some of these will go away because they're no longer valid. And new patterns will show up because they're all emerging. But what will happen is, if it shows you a pattern like this, okay, it'll show you that. And you're like, oh, here's a reversal pattern. And then on this one, maybe it has more of a breakout type pattern. But whatever, what'll happen is suddenly everything says down, 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 down. Cool. So let me reiterate. You're a bear. Great. It's bearish on an hourly. It's not bearish on a daily. But if this continues today and tomorrow, then yes, it could fall for quite some time. Now, because we also do seasonality, I can tell you how many weeks or months it's likely to fall. I already know. Okay? Yeah. And in fact, whether this goes up from now or down from now should not be surprising to you because we have all the data. We have it all here. You just go under the fundamental tab, go on seasonality, done. So simple. But if you don't know, it seems random and magical. Well, that must suck. It's just normal. What's going to happen next is normal. What we don't know is, will normality continue this year because it's an unusual year? So we don't know that. And we don't know if normal starts the first day of June or the last day of June, for example. So we don't know if normal will happen, and we don't know when it'll happen. But at the very least, as a benchmark, you should know what normality is. If you don't know that, then you're random. The markets seem random. And I don't know why you're a trader if you believe everything is random. Then you have no reliable mathematical probability of making any consistent money. So if you think it's all random, dude, I don't know why you're here. Every time you make a trade, the rules change. Like, dude, it makes no sense. So then you're like, no. I do believe you can have consistent returns. Good. So now you need to know why the markets are moving and when they move. And okay, so why and when. Great. And from that, you need to know how to enter and exit positions. Oh, great. Well, that's easy if you have the data. Cool. So let's move on.com. What do you think about oil? Oil, oil, oil. Aussie, Aussie, Aussie. Oil, oil, oil. All right, what do you think, my friends? Okay. Up, down, or sideways? Of course, we could all have different time frames, right? Yeah. Well, taking a look at this, see, I'm long-term bearish, but short-term bullish. And I'll show you how. So, again, this is old data I've done with our team. But if you don't know that, you don't know the markets. So this is all fundamentally based. This. I did this days ago. Look at that. I mean, I probably did that weeks ago. Cool. Great. So, up for now, maybe down for later, right? Yeah. Up for now, down for later. Okay. Short term long, but long term short. What do we see here? 13 hours ago, okay, we have consolidations. So this is why Jim's probably bullish but nervous. Okay, this is your primary line. And if you were a confident bull, this is going to go up forever. Cool. So you can buy the dip. That's right. Now, aha. But we have this, suggestive line. It's not a primary line, it's suggestive. Okay. That maybe at some point we head down. Now, I think there's fundamental intervention going on. So this is, right? Yeah. Could you buy here? Yes. And I have my reasons for it. But is this going to go to 85? No. Is it going to go to 45? No. So that's the problem. Okay? But this is showing you, again, 13 hours ago, you were given a heads up. 13 hours ago? Yeah. To look for some up on the daily chart. 13 hours ago. Oh, yeah, you could have caught this move, right? Yeah. Hey, it's $3, which is equivalent to 300 pips on a euro dollar. Good to know. Doesn't exist on the other time frames. There's only that. Cool. So maybe this goes to 64. Well, we were at 61 or 60. Okay, we were at 60. Okay. On our way to 64. So Friday, you would have caught it at 60. 13 hours ago, we were at 62 and a half, and we're on our way to 64, and that might be the next sell, or 70 might be the next sell. And I'm thinking even 65. Okay, but it is what it is. So that's great. Okay, and there's 65 resistance, so that's why I think that way. But I understand the up. Is it going to go up forever? I can argue against that. Let's just say that. But that's my humble opinion. You guys like the Bitcoin? Who's trading Bitcoin? Anybody? Bitcoin, Bitcoin. Talk about Bitcoin, Bitcoin. What do you guys think about Bitcoin? Long-term long, short-term short? Well, let's look for patterns. Remember, we can look at up, down, or sideways patterns and reversal patterns on 5 different time frames. And when we do that, it takes me, okay, possible breakout, okay, failure, and that's bearish. Done. Less than 10 seconds. Okay. So what do we have here? A break of an up channel. So if we get down to 103.5, then the next pattern is much more likely to be this on an hourly chart. And you were given a heads up an hour ago about this. Okay? Yeah. This was saying 6 hours ago, be careful, even a higher high can produce bearishness. You see that? 6 hours ago, 2 o'clock in the morning. This is pre-London. It was saying, don't be shocked, even a higher high can create some bearishness. You see? Didn't even make a higher high. It double topped and dropped. You think that's bullish? No. In fact, most likely this pattern's going to go away and it'll start doing patterns like this now, that a trend to the downside is emerging. Okay? Well, Richard, you've been here long enough to know that, not understanding fundamentals is fixable. It's not like, you lost an arm in the war and you're like, well, I only got one arm. Like, I can't say, well, I'll just slap a new arm on you. No. You don't know fundamentals? You could just learn fundamentals. Like, what's the problem? Right? There's no problem. Sewing a new arm on is a challenge, but learning fundamentals, there's much harder things in the world than that. Managing a relationship is 10 times more complicated than learning something. Okay? So anyways, but stay away, in my humble opinion. And by the way, Richard, you're here every day. So this is disrespectful, and I guess I don't mean to be disrespectful, but I guess I'm exaggerating for effect, but like, stay away because you don't know. That's not the right attitude, nor is it the right response. When you're like, oh, well, you can just learn fundamentals. Not a problem. Right? It's like, look, I'll pay you $1 billion to move to Italy. Well, I don't speak Italian. Really? For $1 billion, you don't think you can move there and learn how to speak Italian? Right? Like, dude, you can just learn Italian. Right? Would you move to China if you were paid $100 million? Oh, well, learning Chinese is difficult. Uh-huh. Yeah, it probably is. $100 million should be enough of a reward. So anyways, my attitude, and again, this is just me, I can learn anything. If somebody said, Wayne, you need to understand technicals and fundamentals, I'm like, great, that's all I need to know. I will learn all of it. I will master everything. Yes, and it's in the training course on how, I think it's the daily training course. I think I have it on this setup. Well, let me keep this. Let's go to this one. Template. Do I still have it? Yeah. Yeah, you can create your own checklist. Yeah, this one. That's why I don't use it. This one is buggy for some reason. All right. So you can open this tool. Okay. Okay. And you can go through and you can add your checklist. Okay. So this is not the right order, but just imagine, review, review sentiment. Now, you probably do it earlier than that. But if you're a checklist type person, you would go through it like this. So you'd review the fundamentals. You're like, I reviewed the fundamentals. Then I would confirm the trading bias. So like, what do you think about this? This is non-directional. Okay. Market trend, review the sentiment. So you'd open TRADARS and, read the articles, right? That kind of stuff. Okay. So yes, you can create checklists. Okay. Taylor says fundamentals don't matter if your broker is shady. Well, first of all, why would you have a shady broker? And fundamentals last months, Taylor, right? So I'm like, there's no fundamentals for today, right? So your fundamentals are the macroeconomic and monetary policy and trade policy that influences the flow of capital. That's not a minute by minute, second by second, process, right? So your broker can't manipulate you out of the fundamentals. Now, if you have a shady broker, get rid of it. Come to us, trade with us. Simple, fix that. So when I say us, like for example, if you're still learning how to trade and you have a small trading account, at the very least, I can give you a spread rebate, which means every time you trade, a little bit of that money gets put back into your account. Simple. Cost you nothing. You just have to be a member of TRADARS. Simple. Now, if you're ready to trade professionally and you're a profitable trader, then you can join our prop fund. And you get that little spread rebate. Plus, like today, I'm actually sending out cash. Okay. Yeah, you just graduated high school? Congratulations. Okay. Yeah, perfect time. Like, oh, Taylor, people here are jealous in the sense that if you caught on now to trading and made it your career, it's incredible. Grumpy Cat, it should be about 20 standard lots a month. So one standard lot a day. We have found that there's a glitch somewhere and it's not adding up quite properly yet. So I am trying to figure out where that glitch is and fix it. But so like, for example, I sent out rebates that seem, I haven't confirmed yet, but seem should be qualified for 300, but I can only verify for 200, right? So there's a problem. So I sent out 200. It's not like I didn't send out anything. I sent out 200 because that's what I was told was right. So we're double and triple checking somewhere in the system. Why am I told 2 if it might be 3? So, so we're trying to figure that. It's a brand new program, right? So anyway, so I sent out money last month. But in theory, let's put it that way. In theory, it should be one standard lot a day, which means you could do, if you're trading 5 trades a day, so you're doing some scalps, some swings, and like, that's just 2 mini lots per trade. So if you're doing 2 mini lots per trade, and you do about 5 trades a day, yeah, it'll be free. If you do a little bit less than that, you'll probably get 200 or 250 instead of 300. So it'll cost you almost nothing. So the idea is you trade with us, and TRADARS is either super cheap or free. But so this program is locked in. It's fully automated. That's great. It just goes from we just add cash directly into your trading account. And it's real. It's not a credit. You can withdraw that. So it's real, just a little bit of money. So at the end of the year, you save, right? It's just, it makes trading a little cheaper. You're welcome. Okay. It makes your spread a little bit more narrow. It's like a credit card that gives you a 3% cash back. Is it going to pay for your credit card? No. But it's nice to have some cash back, right? So credit cards pay 2%. So imagine you got 3% of your trading with TRADARS makes your trading 3% cheaper. It's not a lot, but it's something. Cool. That's automated. Everybody gets that. But this is the one that we're flushing out and should be refined very, very, very soon. And this is the one where when you go with the prop fund, rebates. Oops, I keep clicking the wrong one. There you go. That's why. So when you trade with our prop fund, that gets to the point where if you're a profitable trader, see, it's for people that actually are profitable, then we give you an equity boost. We make your spread a little narrow, right? And we give you cash via PayPal transfer. You see? So TRADARS ends up being free, in fact, right? Now, what if you are profitable in the trade, in the prop fund? How much money do we keep out of the profit? We keep nothing. You keep 100%. How much does it cost to take a challenge, or what else do you call them? Evaluation. How much is an evaluation? Hey, some YouTube gurus sent me an email this morning. Oh my God, I can save 80% on the evaluation fee. No, we're free. There is no fee. I don't know. When somebody sends me a 90% off or 80% off, it sounds pretty scammy to me. No, it's free. There is no trial. There is no exam. How much of the profit do we keep? None. Okay. But you have to be a member of TRADARS. Well, how much is TRADARS? Well, if you're keeping 100% of the profit and we're sending you rebates, it's either super free or free. It's either super cheap or free. Like, dude, it's incredible. I know, right? It is incredible. Okay. Yeah. But again, if you can't trade, that's not for you. Okay. Grumpy Cat, why is Australia a problem? Taylor, restricted trade environment for Americans? Do you mean because of compliance? Nothing's changed compliance-wise in 10 years. Bit more than that, 15 years. Dubai is nice. Yeah, there's taxes there now. There's no problem. There's no problem. Yeah. Well, don't trade the New York Open. Taylor's like too many regular. No, but it's fine. It's fine. The rules are different, but it's not going to keep you from being a successful trader. There are many people in America that make a lot of money trading in America. There's no problem. Okay. What was it? Oh, wait. We still have to do gold. Yeah, sorry. I get thrown off our new routine. But Dubai is nice because London opens not too early and New York's not too late. London would be nice. Yeah. I have a friend who used to trade out of Mallorca. He's an American, but he got himself into some like fancy pants enclave on this private little island off the coast of Spain. He liked it. Yeah. But I think if you're in high school, most high school students or just recent graduates of high school are probably not ready to move to a private enclave on an island off the shore of Spain so that they can trade. But it's not a bad idea. All right, let's do some gold. Yeah. But I'll tell you though, Taylor, I have kids that are your age. And by the time they are my age, based on the strategies I've already taught them, because they have high school type jobs, so they make some income. It's not a lot, but they have their jobs because I don't give them money. I pay them for grades, but that's it. That's it. So they work, and I've taught them the basics of money. So based on their income as high school students, when they're my age, assuming I help nothing at all, they should have $20 million each. Now, that sounds like it's too much, so let's just dumb it down. $5 million. That might be more believable because there's some questions in there. I don't know what kind of jobs they'll get after university. I don't know if they'll maintain the lessons I've shared with them. I don't know what the market will produce, although I know what I will produce. I don't know how much they'll put into real estate and when. But the cool thing about finance, okay, or if you're really fancy pants, finesse, it's math. It's math. So I can make you a millionaire for $500 a month. It's just math. The thing is, people their whole life say, well, I can't really afford $500 a month. Yeah, but they'll pay $300 a month to watch football. Oh, I got to have the football package. Okay. Put $500 a month aside. No, I don't have that kind of money, but I have $1,000 iPhone. Really? You couldn't buy a $500 iPhone? Oh, well, I have to have the Model 27 because the Model 26 is just not good. Okay, that's poor people talk. Right? Yeah. So anyways, that kind of thing, and I'm doing this for you, Taylor, because you're young. You can, retiring at my age, or it's 70. I'm not 70. I'm not even close. I'm not even 60. But if you started right now with the right attitude, Taylor, you can change. Let's say I don't know your demographic. Let's say you're average or poor right now. You're poor or you're middle class. I might even argue middle class is poor, but whatever. Let's say you're not rich. Oh, I can fix that. And I can help your children become rich. That's it. It's not a problem. Now, and by rich, I mean wealthy. I mean, those words are interchangeable, but they're not the same thing. So I can make you rich, but I can make your children wealthy. How about that? Okay. Yeah, and Taylor, so does my son. Mathematically, and I've showed him multiple times, just keep doing what you're doing. I know you're going to make more money one day, and I know this and I know that, but just this one strategy that you're doing will give you $5 million. And then when you're too old to work, let's say that's all you have. That's it. That's all you have. Well, you'll get $500,000 a year doing nothing. And then when you die, that $5 million will still be in the bank. So you'll have to find a way when you're 70 to live on only $500,000 a year. Well, there's rich, Taylor, and there's wealthy. Wealthy means you make money doing nothing. Rich means you make a lot of money, but you trade your time. Okay, a lawyer making $500 an hour is poor. Because if they stop working, they stop making money. So they just charge a lot of money. So they're rich. They can spend a lot, but okay. Now, if they save a huge portion of, or any, let's say they save 20% of that money and they put that aside into real estate or into, they give it to me and I create an income fund from them. Either way, the real estate produces income through collecting rent, or I produce income. Either way, you have this passive income. Now, you don't work. That's the cool thing, right? You don't work. But the income comes in regardless. So at one point in your life, the more you save, the more you earn. So it compounds. So then the more you earn, and then more you earn, the more you earn. At some point in your life, what will happen is you're a lawyer making $500 an hour, but your money makes just as much. And the money is not doing anything. So you can quit your job and just make $500 an hour doing nothing. Or you can keep doing your job and get yourself to $1,000 an hour right now. But, it compounds is all I'm saying. Right? It compounds. So anyways, but you need time. The two most important variables for wealth is how much money you start with. So if you started with $1 million, you're better off than starting off with $1,000. I think we can agree with that. But if you grow at 10% a year, then the next variable is, well, how many years? Is it 5 years? Okay, well, then you double your money. Is it 30 years? Oh, my God. Yeah, you see? All right, gold. Let's do gold. Let's do gold. Let's do some gold. So what do you guys think about gold, huh? You guys like gold? What's going on in gold? Let's take a look. Okay. Possible breakout in gold, 15 minutes. Possible breakout the other way on the 4-hour. Daily consolidation. It's a bit of a mess. So the trend on the daily here, I'll keep to this one, is sideways. On the higher time frame, Okay, we see back a little bit more. Okay, because this is only here. Here. So when you look further out, okay, it's not a rising wedge. That's only in here. Okay, this is the rising wedge, okay, that we see on the 15-minute chart. But on the 4-hour, it's like if this does not break down, instead it breaks up, then we are in the business of buying dips here. So how do you put all of this together? This says sideways. This says up. This says down. Which one is right? They're all right. They're all correct. So none of these exist. They're all emerging. So if it breaks down, it's going to put a pause to this setup here, which is a much different setup. So it could be down for the next 3 hours and then fall to what? Fall to the primary line. Okay. Now, if it doesn't break down, then we have that up opportunity because it says up, down, and now we're long. So if this does not occur, remember it's emerging. It's not telling you it's going to. It's saying we have the probability. We are challenging, okay, the primary line. So it doesn't say sell. You have to think. My goodness, you have to think. This doesn't mean sell. This doesn't mean sell. It means if it occurs, then you'll probably become bearish. This will probably go away, and we'll have a new type of pattern. This says, let me explain what this does say. It's a rising wedge, which means you're a bull. The pattern right now is bullish. If a bullish pattern breaks, it's a threat to bulls. This is a threat to bulls, not an opportunity for bears. You have to know how to trade. On the higher time frame, 4 hours, this is bullish in theory, because we might be breaking the secondary line in which you want to buy a dip and then let it rip. So that means this needs to continue. And if it does, we're going to 3,500. Ooh. And what would happen here? Breakout, pull back, and what would happen to this triangle? The triangle would disappear. Why? Because the primary line would now be like probably, we'd probably have a pattern more like this. And so the triangle goes away because the triangle is only telling us right now on the daily chart gold is consolidating. But if it breaks out, it's no longer consolidating. So if it's making higher highs and higher lows, it will show you that. See, this is doing hardcore analysis for you. And things will come and go as they appear, just like having a technical analyst working for you, watching all assets. Remember, TRADARS watches 7,500 things all at once. You cannot compete. So this is why a lot of people just like, oh, I trade euro dollar every day. Okay. 15 years ago, I wrote a book and I dedicated a whole chapter about how dumb that is. Dumb! It's called the Greenback Guru. Yeah. So anyways, looking at gold, are you a bull or a bear? Well, technically, the daily is not bullish, but it might become bullish, but it's not. The 4-hour is bullish. Okay? But the 15-minute is not. So what if the 15-minute turns bullish? Then I'd probably trade along with the 4-hour and then hope that the 4-hour then breaks the daily into a bullish trend. There you go. Now, how do you make that decision? Like, well, Wayne, that's where I lack capability, Wayne, is I don't know if I should be a bull on gold. Oh, that is so difficult. You are so right. We could never be able to make a decision like that. Yeah, am I being sarcastic and facetious? Uh-huh. Wayne, I could never figure out if I should be a bull or a bear. Oh, maybe you should be neutral. Yeah. Maybe. Or maybe you should have a shorter term view of this, not longer term, and just say technical trend and seasonality. So I teach this all the time. This is a different type of strategy. We're not doing macroeconomics. We're just doing seasonality. So you look at this, you're like, oh, I'm allowed to buy dips. Yeah. Now, are you allowed to sell? Well, it's not bearish. So this says don't buy or sell. Okay. Then I look down here. Does it say buy or sell? It says I can buy it, but not sell it. Well, this bias is daily on health. Okay. But I look at this and I say, nothing on this allows me to sell gold. I can't even think about it. It makes absolutely no logical sense to sell gold. Doesn't mean I need to buy it, but it absolutely cannot confirm a sell. Ooh, look at this. It's already changed. Look at that. The 4-hour went away. Now we have a 15-minute and a 30. Ooh. Look at that. Our 4-hour went away. Wow. Okay. Well, we're under threat. Why do I say threat? Because there's nothing. Oh, look at this. There's even. Look at that. That's cool. We have multiple changes here. Wait, this is the 4-hour. Wait. Okay, this was here, this was here, and this was here. Okay, cool. So this just formed. Okay, that's the change. Okay, sorry. Okay, so it's similar to the 15. It's saying, look, if it breaks down, this will challenge us. Okay, do I sell it? No. Why? I have no reason based on macroeconomics or seasonality. So this is a short-term hesitation. Great. I'm still interested in pursuing a breakout to the upside and break based on this, okay, this, which we've already covered. So if it breaks, I want to buy a dip. And how long will that last? A couple of days? No, according to this, it could last a couple of weeks because in this situation, we would then have a higher high, higher low on the daily. Cool. So I want to buy. I can't sell. So if this falls, the falling is an opportunity for me. Now, let me add one more piece of advice. If it falls and I want to buy, do I buy down here? No. But Wayne, you said you wanted to buy it. Uh-huh. Do I buy now? No. Do I buy now? Maybe. Do I buy now? No. Do I buy now? Absolutely. And by then we'd be up here, and I already know I can be long for a couple of weeks. Oh, done! But no matter how bearish the chart patterns, okay, this is not bullish. That is not bullish. So an amateur would just sell it. A bull would say, I'm waiting, and that would make them a professional. I'm waiting for bullish patterns to form here so I can enter this trade. Is this bullish? No. Is this bullish? No. So I can sit and wait now for the 15-minute and the 30-minute to turn bullish. Ha 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 ha! Oh my God, it's so good. Okay. So I hope you like TRADARS because we have sentiment radars, right? I hope you like TRADARS because we have fundamental radars. I hope you like TRADARS because we have technical radars. I hope you like TRADARS because we have hours and hours and hours of performance coaching every day. I hope you like TRADARS because we make your spread a little narrower. And when you're a professional trader where you trade and you make money, great. I hope you like TRADARS because it ends up being free. What does that mean? You pay money every month, and then, like today, I PayPal it back to you. So today I will PayPal, I don't know, depending on your trading volume, $100 back, $200 back, $300 back. Dude. Oh my God. Oh my God. This is great. And I'm going to automate the process of that. When you trade with us, I will be able to get you all these templates for you so that you can download them into we use like for our prop fund, we use MT4. Oh my God, really? Yeah. So if you're like, well, Wayne, I want my charts to look like that. You can. Wayne, I want to trade with MT4. Well, you will be. Wayne, I like these trading sessions that you did last week. Oops. Yeah. See, you should be trading here. 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 Okay. Cool. So you like all this? I want to make it automatic. You open up a trading account. We make your rebate a little cheaper. We give you a cash rebate at the end of the month based on your volume so that TRADARS is cheap or free. I want you to have all our templates. I want you to have all our performance coaching. I want you to have all our fundamentals, all our technicals, and all our sentiment radars. And I want you to be a professional. I want you to be able to pay your mortgage, put your kids through college, all being a trader.
Oil leaps 4% after OPEC Plus keeps output increase unchanged. Canada S&P Global. May manufacturing PMI 46.1 versus 45.3 in April.
Canada S&P Global Manufacturing PMI up to 46.1 in May from previous 45.3. Beauvais reports strong end-month corporate demand for U.S. dollar.
U.S. dollar could slide 10% in the next year, warns DeVere Group.
Ukraine handed over to Russia. Delegation a list of deported children to be returned home.
Global markets brace for impact. Central bank rate cuts and jobs reports await. Hong Kong retail sales fall 2.3%.
Singapore manufacturing PMI increased to 49.7 in May from previous 49.6. Euro-US dollar price forecast. Bulls hold the grip, 1.1520 at sight. All right, and we're 13 minutes away from ISM manufacturing for the United States of America. Expecting a contraction. Put that on your radar. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day.